Street, but as well as equities have performed, the averages were still beaten by that so-called safety asset, which is gold. You're looking at a chart of gold versus the Dow Industrials there. Joining us this morning with the outlook for 2007 when it comes to gold, Jeffrey Christian, Managing Director at CPM Group, and Greg McCoach, President of the Mining Speculator. Gentlemen, good morning to you both. Happy New Year.
Happy New Year to you too.
Happy New Year.
Jeff, a lot of people probably wishing they had listened to some of these gold bugs at the beginning of the year. It's up 23%, highest close for the front month since the beginning of this month. Can we repeat that in '07?
Well, it depends on how you measure it. We're looking at average prices. Excuse me. Our expectation is that the gold price probably will be very strong in the first half of the year, and you could see some softening in the second half depending on what happens in terms of international politics.
Explain what you mean by that. What would cause a pullback?
Well, one of the things that, the world economy and the U.S. economy in general are in pretty good shape. Our major concerns have to do with the oil market and international politics as they apply to the oil market and consequently flow through to the broader economy. So if you don't have major problems politically and in the oil patch, you could see a situation where the world feels that equities, currencies, and bonds are more attractive in the second half of the year, and they buy less gold as a safe haven and as a portfolio diversifier, allowing the gold price to subside a little bit.
So we get a little more comfortable and not as much of a need for a safe haven. Greg, I'm going to guess that you disagree with that.
Yeah, I'm very obviously bullish on gold. I believe we're going to see much higher gold prices, not only for 2007, but beyond 2008 as well. The reason for that is just the dollar's problems. The dollar is becoming increasingly scrutinized by smart money people worldwide, institutional funds.
Scrutinized, or just is it just an all-and-out exit in your view?
Well, it's becoming an exit. What's happening is gold is moving from its status as a commodity, hey, it's good for jewelry, to its status as money. And the reason that's happening is because paper assets aren't performing as they once were. It was lunacy just a few years ago to talk about the dollar in this manner. But what's happening is this shift is beginning to happen, and as paper assets run into trouble, you're going to see much higher gold prices.
Jeffrey, what do you think of that? I mean, you could argue, yeah, the dollar could face some weakness. That would be good for gold, but there's a lot of markets out there that have done pretty well in '06, could do well in '07, and gold's got some competition, wouldn't you say?
This is the first time in 3 decades of being a gold market analyst that I'm more of a gold bug than a gold bug. Gold has always been a financial asset. The gold price has always been determined by investor demand or lack of demand for gold. Gold's jewelry, use in jewelry follows the price. The price is determined by investors. Investors worldwide have always been suspicious of the dollar and paper currencies in general, and that's one of the reasons why they have bought 700 million ounces of gold over the last 40 years. That's 3 times as much gold as central banks have sold during that same period.
Greg, are you one of those that's calling for $1,000, $2,000 gold over the next 10 years?
Absolutely. I see gold comfortably in 4-digit territory in the next 12 to 24 months.
12 to 24 months at $1,000.
Over $1,000.
Is that going to be a smooth ride, or is this going to be a jolt to the $1,000 mark?
Well, I hope it's not a jolt. If it's a jolt, then we got major problems. I don't hope that. I'm hoping for the grind that we've seen this past 6 years. Gold, after it bottomed out in '99, 2000 at around $250 an ounce, has crept up every year. It's made a new high every year, 6 years in a row. It's in a bull market. I would call it a stealthy bull market because of all the attention on other markets, but I believe gold is going to start to move higher now. We're going to go into a second phase. This first phase was kind of more of a grind. Let's hope that grind continues, but it will probably increase in stature, and it'll take gold over $1,000 an ounce, I believe.
So Greg, if gold goes over $1,000 an ounce, what are we looking at in terms of other indicators? What's the oil price? What's inflation going to be running? How low is the dollar going to be sinking by the implication that everyone's left it to get into gold?
Yeah, I think what happens as that exit happens, what people need to understand is they call it precious metals because it's really so rare. If you took all the physical gold that exists above ground in the world and melted it into one giant cube, that cube would measure 20 yards by 20 yards by 20 yards. It's a tiny market. The market cap of all the gold producing companies in the world doesn't even equal the market cap of Cisco Systems or McDonald's. So what people need to understand about this is these markets are so small. And when the masses, even a small percentage of the masses, 5%, make a move into gold, it will take the prices much, much higher just because it's such a small market. And so I think what's going to happen to, comparing it to other markets, I use the Dow Jones Industrial Average to the ounce of gold. How many ounces of gold does it take to buy one share of the Dow? Well, in 2000, it took around 57 ounces of gold. Now it only takes 20-some ounces of gold. I think you're going to see that ratio, the gold ounces per share of the Dow, continue to decline.
Gentlemen, it's going to be interesting to watch. Appreciate your time this morning. Have a great New Year.
Great to you
Jeffrey
too.
And Greg.
Thank you for being.